Hey traders, Jason here from Leavitt Brothers. In this video, I'm going to look at different market cycles to see what they predict for the current market. Okay, but I'm going to admit something up front. I don't make decisions off analogs like this. We've all seen people match up a chart from today with a chart from the 1930s or 1940s or 1950s and then extrapolate out with some sort of an outrageous prediction. Okay, I don't do that. I don't just assume that just because today's chart closely matches a chart from the past that the market is going to play out the same way. Nevertheless, seasonal tendencies are good to keep in the back of your mind. So in this video, I'm going to show 3 different seasonal patterns. Okay, then I'll show a composite of the 3 patterns. And I'll admit right now that the composite is pretty bearish, which somewhat matches the market's breadth right now. So to balance this, I'm going to put out another video tomorrow morning, which is much more optimistic. All right, so let's get to this. All right, first seasonality pattern I'm going to look at is just the month-by-month performance of the S&P 500. Okay, so here we have the S&P 500 from 1950 to 2019. This is what the market has done every January. Add them all up, divide by the total. This is how well it's done in February, etc., etc. Okay, you can see that the best. You've heard the whole thing about sell in May and go away, sell in May and go away, and the best the best 6 months of the year are November, December, and then the first 4 months of the following year. You can see that backed up here, that those 6 months are definitely better than the other 6 months. Okay, so the thing I want to look at right now is August tends to be a down month, and September on average since 1950 has been the worst month of the year. Okay, this is the period of the year that we are getting close to entering. Today is this is the weekend of August 21st, 22nd. So we have another week and a half of August, and then we get into September. So historically, September is the weakest month. That is the backdrop of where we're operating right now. All right, next up is what's going to be the presidential cycle. Okay, so what we have here is how the market has done in each month of the presidential cycle. Okay, so this first data point is going to be January of year 1. The second one is going to be February of year 1. The third one is going to be March of year 1, April of year 1, and so on. Okay, so there should be 48 bars here. So this is January through December of year 1. January of December of year 2, and so on. Okay, so what I want to highlight is that we are in year 1, and this right here is August, and then what we're coming up on is September, October, which historically, this is the Dow from 1900 to 2018. Historically, the market has not done very well in September and October of year 1 of the presidential cycle. So this is the period that we are entering. We're currently in the flat August period, and we're about to enter the the very negative September, October period. All right, let's look at another seasonal tendency. This is the decennial chart. Okay, what it does is it takes the market's performance every 10 years, and then it comes up with a composite. So for example, years ending in 0, okay, have acted like this on average. What does that mean? It's like if you take the performance of the market in 1900, 1910, 1920, 30, 40, 50, you add them all up and you come up with a composite, you get that. Then for the next block, you get years ending in 1. They act like this. Okay, so 1901, 1911, 1921, 31, 41, and so on. And obviously, like this, years ending in 4 tend to operate like this, tend to play out like this. So 1904, 14, 24, 34, 44. And you get an average. Now, why the market tends to act or play out a certain way in certain years of the decennial pattern, I don't know. Okay, we understand the January through December pattern because there are things that have, it's winter, it's like kids go back to school, and the business cycle on a year-to-year basis, that makes sense. The presidential cycle makes sense. Early in the president's year, market tends to not do as well. President is more concerned on checking things off his his list of things he wanted to accomplish when he gets into office, but as he gets into year 3 and year 4, he's more concerned with getting reelected or keeping his party in power, so he tends to do more things that, spend more money and get the economy going so the market does well. So that makes sense. I don't know why the decennial pattern has any type of meaning, but there are definitely some tendencies here. All right, so next, Ned Davis Research, NDR, they took the composite of these three. Okay, they equally weighted the 1-year cycle, January through December, with the 4-year presidential cycle, with the 10-year decennial cycle, and they came up with a composite. Okay, and this is what this chart is. So let me just highlight. This is for the S&P 500. Okay, it's I know this is kind of hard to read because it's a small chart. This is the what it says here is this is the composite equally weighted of those three things. Down here it says it's based on the daily data from January 1928 through December of 2020. All right, so what you have here is the blue line here is the composite of those three seasonality patterns. And the orange line here, which is kind of faint here, you can see the orange line right there. It is what the S&P 500 has done in 2021. Okay, so you can see the blue line is the historical average based on the composite. Orange line matches up pretty close. Okay, at least the trend is in place. Not all the highs and lows are exactly in place, but it actually does line up pretty well. I don't know what the correlation coefficient is, but it's probably pretty good. And as you can see, the orange line stops here at the end of July, and then it looks like, as you can see here, August tends to move down, and then September gets really, really weak, and then into the end of the year tends to just kind of bounce around in a range. That is what the composite says. Okay, this is the month-to-month seasonality pattern with the presidential cycle, with the decennial cycle. What is right now? What are we entering? Well, in the yearly pattern, we're end of August going into September. In the presidential cycle, we are end of August, September, October of year 1 of the presidential cycle, and you combine that with years ending in 1. This is 2021, so this year ends in 1, and that's what the blue line is, and this is what we are coming up against. Is this a prediction? Not necessarily. I'm not going to just abandon all longs immediately. I'm not going to just go short immediately, but it's something to keep in the back of your mind as we move forward, that there's several different things combined that point towards lower prices next month and a very so-so market going into the end of the year. All right, so that's all I have. I know that paints a very bearish picture. So tomorrow morning, I'm going to send out another video, which is a little bit more optimistic. Okay, but you do want to keep this in the back of your mind. In my masterclass, which is accessible just on the Leavitt Brothers homepage here. You go to that link and it's just some information, a video about the masterclass. In the class, I do an entire chapter. There's probably over 30 different miniature videos where I talk about statistics. Okay. I talk about things such as like when the first five days of January are up, what does the entire year tend to be? When the first 10 days of January are up, what does the entire year tend to be? When January is up, when January and February are up, when January, February, and March are up as a whole, and when January, February, and March, each individual month is up, like what does that predict for the rest of the year? A lot of interesting stats. Many of the stats have extremely high success rates. Like they happen 30-40% of the time, and when they happen, the success rate is like 24 out of 26 years going forward. All right, so if you like to know a lot of stats that kind of guide you through the year, check it out. Okay, one good trade pays for the class several times, and then of course you're home free for many years. All right, hope you got something out of this, and again, I'll be sending out a video tomorrow morning, which is a little bit more optimistic. All right, see you next time.